So, hello guys. Just so you know, my voice is still a little bit rough, so bear with me. And also, this is the first video I've ever recorded, so just bear with me. I'm sorry if there's anything I forget or if there's something I'll need to explain a little bit deeper. But for now, yeah, I'll try to explain it as quickly as possible and as clear as possible. And yeah, so as I mentioned before, in this video I'll be explaining how I trade funded accounts. Um, doesn't matter if you're trading the challenge or the actual funded account. Just so you're aware, this is all about risk management. Simply put, it's about how to handle risk in order to make use of an account for as long as possible. And the trading strategy itself is completely irrelevant in this concept. It doesn't really matter what you trade, trend lines, order blocks, fair value gaps, whatever you can still use this risk concept. And I've said it before, but once again, you can make money with any strategy. It doesn't matter how simple or complex it may be. So I've written down a few things here that I'll try to use and explain this concept to you. And for this whole example, I've taken a 100K account. And first things first, if the first thing you need to understand when trading a funded account is, again, example, a 100K account, you usually have a 10% max drawdown limit. And the first thing you need to understand is that you don't really have a 100K account. You have a 10K capital. That is actually your real capital, okay? And if you keep that in mind, a 100K account isn't that much. So you don't have 100K, you have 10K. This would be your real capital, and now your account, your thinking already changes. Your The idea already changes, and it has become common practice that most people use 1% per trade. The problem with that is after 10 trades, you would blow the account. So if you have 10 losing trades, which isn't a hard thing to do, you would just blow the account. And again, some people may think that no profitable trader loses 10 trades in a row, and that is not true. And let's look at the market today, for example, with everything going on fundamentally, with all the wars and the tariffs and everything. It is pretty easy to have a losing streak that lasts for 10 trades. And that's why risk management is key, okay? And I've said it before. When I started, I didn't really understand this. I didn't really understand why people said that risk management is the most important thing when trading. Psychology by itself is the most important thing when trading. But after 4 years, I've understood, and now I'll explain it to you. Okay, so this is one of the most important things. Adjustable risk management and being consistent with it is key when trading funded accounts. So bear with me. I was just looking at it. I haven't opened this document. I've written it last week and I haven't opened it since then. Again, I've taken a 100K account as an example with an average risk reward of 1 to 3. This is, let's say, for an example, this is the way I trade, okay? I always use a 1 to 3 risk to reward, and I'm currently trading the 100K account. So this is how it would look like when I make wins. Okay, the first trade, I'll risk 1%, a win would be +3. Second trade, I'll risk 1.5%, and a win would be 4.5%. The third trade, I would be risking 2 or even 2.5%, it doesn't really matter, and the win would be 6%. Okay, this is what adjustable risk management would look like when making profits. Okay, and this would just go on like the fourth trade would be even risking even more, and you don't have to use percentages. You can also just stick to money itself. So let's say you're comfortable with risking $1,000 on the first trade, you'll risk the thousand. Now you made a win, that would be 3,000. Let's say now you're comfortable with risking $2,000. Okay, you can risk $2,000. If it's easier for you to play with risk when having actual money and not percentages behind it, then you can do that also. But yeah, this is just the example for how I would trade when I make wins. And now here you have the equation for how I would trade when I make losses. Okay, so 100K account, risk to reward of 1 to 3. So first trade 1%, second trade 1%, third trade 1%. After 3 trades, losing 1%, the overall drawdown would be 3%, $3,000. And now the first change happens, okay? The fourth trade, I'll be starting to risk half a percent, okay? So after three trades, after 3 losing trades, I would halve my risk. Like you can see, a fourth trade, I'll risk again 0.5%. The fifth, sixth, seventh trade, I'll risk 0.5%. So after 7 trades, overall I would be in a drawdown of $5,000, 5%. And for example, let's say I would have risked 1% on the 7 trades, I would be in a total drawdown of 7%. So I've I saved 2% just by adjusting risk here. So 7 trades, overall a 5% loss on the account. And after these 7 losses, you adjust risk again and half it. Next trades, you'll do 0.25% risk. And important, same logic applies when making profits. For example, let's say after 7 trades, your losing streak is over and you start making wins. Okay, so the next trade, you risk 0.25 and you make a win. That would be 0.25, 75% gain, $750. And again, the next trade, the ninth trade, you do the same thing. You risk 0.25 and make a gain of 0.75. Now you had 2 wins, 2 back-to-back wins, and now here you had 5% overall 5% loss. After these 2 wins, you made 1.5%, and now your overall drawdown would be at 3.5%, 3,500. And important, now you can go back to risking 0.5%. And this would look something like this. 10th trade risking 0.5%, and you make a win. Now you're at now you made a gain of 1.5%, $1,500, and now your overall drawdown level would be at 2%. So after this 10th trade, I would go back to risking 1%. Okay, so I I've something important when you start to make wins, back-to-back wins. Okay, and this is important. So when you start making back-to-back wins, you need to capitalize on them. So if you're in a winning streak, 2 wins won't be seen as a profit, as a winning streak. But let's say you had 4 or 5 back-to-back wins, you need to capitalize on them, okay? And that's why this adjustable model is so important. When I start seeing that my strategy in the current market cycle is working good, it's I'm making good profits, minimal losses, maximizing profits, then I'll start to risk even more. But just for as long as the winning streak continues. So at the beginning of the year in January, I had like a winning streak of 18 trades in a row. Um, and important thing, after 10 trades, I started to risk more. Okay, after 10 trades, I was like, okay, my strategy is working very good right now. So I'll need to capitalize on it. I'll need to maximize my wins. And the next 8 trades, these were the best trades I've made. And again, only wins. And this is something you need to learn to do if you want to make maximum profits when trading funded accounts. So back to the model. Yeah, after 10 trades, you would be at 2% drawdown. And the next trade, the 11th trade, I would risk 1%, and the win would be 3%. So after 11 trades, I haven't written it down, but just keep it in mind. After 11 trades, you would be at a 1% gain on the account. Okay. And now when you're at 1% gain, again, risk the next trade, again, risk 1%. And when you make a win, you're at 4%. When you're at 4%, you can start adjusting risk again. So you could just stay at 1%. You could go up to 1.5 or 2%, or even 3 to 4%. Like I know people that trade like this. I know people that would risk like 3, 4% trade, or even the first trade on the account, they would just risk like 2 to 3%. And when they lose the first trade, then they'll adjust risk and go to 0.5 or 0.25% risk. Um, yeah, that's the model I was trying to explain to you. I hope everything is clear. If you have any questions, you can just yeah, write me a direct message, or just write into the group. I don't really care. Just hit me up and I'll try to help you with anything if there's any more explaining I need to do. And yeah, that's basically it. I hope everything is clear. And I wanted to make an announcement. I will be trading funded accounts for clients. So not now, but next month, or let's say mid-June, I will officially start passing accounts for other people. This service won't be for free. I can't do it for free. I'll need to um, yeah, it's not an easy process. I'll need to put time into it, and yeah, I won't be able to do it for free, fortunately. But again, the group by itself and the signals I'll be providing will be for free. But if you want me to actually take your account and trade it and pass the funded, pass the challenges, this will come with a price. And yeah, I'll write write it down into the group also, so that everybody reads it if you don't watch the video, and that would be all. And yeah.